Hello and welcome to the exam 3 review. So the third exam is going to be on chapters 9, 10, 11, and 12. I'm going to split these videos up to talk about each individual chapter. So this first video is going to be on chapter 9. And just a reminder to, when I show the problems, to pause the video and try and do the problems before I talk about them. And with that, let's get started. Looking at this first problem, Company B purchased a piece of equipment for $250,000. The useful life of this asset is 5 years, with an estimated salvage value of $50,000. Assuming straight line depreciation, what is the book value of the equipment after 2 years? Alright, so again, pause the video, try and do it for yourself first, and then I'll talk about it. Alright, so the first thing that we got to do when we do these types of problems is we have to figure out the depreciation base. And if you remember, the depreciation base is cost, let's use the pen, cost minus salvage value. So we have 250,000. We're going to subtract the 50,000. Now, conceptually, why we subtract the salvage value is because the depreciation base is how much we're going to depreciate over the life of the asset. So we don't want to include the salvage value in the depreciation base, because if we think we can sell the scrap of the equipment at the end of its useful life for $50,000, we don't want to value our equipment less than $50,000. So if we didn't have this $50,000 in our depreciation base, we would end up valuing the equipment at zero at the end of the useful life, which we don't want to do because we can sell for 50,000 scrap at the end of the useful life. So that's why it's included. So of course this is going to be 200,000. So it wants to know the book value or the carrying value of the equipment after 2 years. So we have to know the depreciation per year. So the 200,000, this is the depreciation base, and it's going to be how much we depreciate every year. Let me delete some of this stuff, clear up some space. All right, so we have to divide this 200,000, or the depreciation base, by the useful life, which is 5 years, and we get 40,000. Now, what is this 40,000, you may be asking? This is going to be the depreciation per year, because we took our depreciation base. That's pretty sloppy, but that's the depreciation base. So how much we're going to totally depreciate over the useful life divided by the useful life, and this is how much depreciation we're going to have every year. Probably buy a pen for this eventually, so I'm just using my finger right now. But anyways, so now to get the carrying value, we have to take our cost, which was 250,000, minus accumulated depreciation. And so this 40,000 is going to be depreciation every year, and so it's asking for after 2 years. So we have to multiply the 40,000 by 2, and it's 80,000. So of course the carrying value after 2 years is going to be 170,000. Yep. Let's get rid of some stuff. Yep. So this 170,000 is the book value after 2 years. This 200,000 is a depreciation base. So hopefully that made sense. And remember, for every year, while the company owns this equipment, at the end of the year they're going to record for the 40,000 an expense for depreciation expense, and they're going to credit accumulated depreciation equipment. And this accumulated depreciation is a contra asset, so it's going to decrease the value of the equipment. So the transaction would look like this. So you would assets equals liabilities. So I want you to actually try and do this first before I do it. So remember, the depreciation for every year was 40,000. So I'll just give you a second to before I fill this out. All right, so the 40,000, the depreciation expense, that's going to decrease shareholders' equity even though it's being debited. Because remember that expenses decrease shareholders' equity. And then there's also going to be a decrease to assets from accumulated depreciation. So this is depreciation expense. This is accumulated depreciation. So this is going to show up on the income statement. This is going to show up on the balance sheet. All right, so let's talk about what happens when we sell the asset for some cash. So we purchased a truck for $17,000. The truck has a useful life of 5 years and a salvage value of $2,000. Straight line depreciation is used. What gain or loss will be recorded if the truck is sold for $10,000 at the end of the second year? So again, we have to know what the carrying value is going to be at the end of the second year, because that's how much the equipment is worth to us at that time. And we compare that to how much cash we received to know if we got a gain or a loss. So it's kind of like the same steps. Remember to pause the video and try it for yourself before I start talking about it. So this should make sense. Cost minus salvage values or depreciation base divided by 5. Again, this is going to give us our depreciation every year, and this should be 3,000. And so to get the book value at the end of the second year, it's going to be 17,000 minus 6,000, which is our 3,000, which is our depreciation per year, times 2. So it's cost minus accumulated depreciation, and we get 11,000 as our book value at the end of year 2. So now what we do with this is we compare this to our cash. So at the end of the second year, we value the equipment at $11,000, and we're getting 10,000. So we're getting less money than what we think. You know, like we think the truck's worth 11,000. We're only getting 10,000 for it, so it's going to be a loss. So how do you like the equation that you could use if you're an equation person is gain or loss is equal to book value or carrying value, whichever you prefer, minus cash received. So our book value was 11,000 minus 10,000. It equals 1,000. It's a loss. So yeah, so let's talk about what we would record with this. So again, I want us to try and fill this out so we know what's going on. All right, let's take a second, try and fill that out. All right, so at the end of the second year, we're getting rid of the truck, and we would get rid of it at cost. So we're losing 17,000 in assets, and then we're also clearing accumulated depreciation, which is going to be actually, since we're getting rid of a contra asset, it's actually going to increase assets. And then our gain or loss is going to be over here for 1,000. I'm missing something. Oh yeah, and then we get cash. So it's going to be plus 10,000. So this is cash. This is losing us. This is us losing the equipment. And then this is us clearing the. Oh, sorry. Oh, I guess I'm reaching my stoppage time in a couple seconds, so we'll continue it in another video. So yeah. Oh yeah, this is accumulated depreciation. We're clearing the accumulated depreciation, so that's why assets are increasing.